Happy New Year, everyone. It's Greg Dorsey here at Leeb.com, Leeb.com. Today's Monday, January 3rd. New Year's is a time of hope and promise. Vows of diet and exercise are still being adhered to, and optimism of what the year ahead holds is running high. It's also typically a good time to invest, as year-end tax selling generally gives way to a wave of buying known as the January effect, with small-cap stocks frequently leading the charge. So the action today did not disappoint, with stocks starting off the new year with a bang. Up volume swamped down volume by a 5-to-1 margin, and the advanced decline line was positive by nearly a 3-to-1 margin. Blue chip stocks tacked on more than a full percentage point, while the Russell 2000 index of small cap stocks gained nearly 2%. We wouldn't infer too much from one day's trading, however. We've seen plenty of New Year's rallies falter after getting off to a good start. With the promise of continued money creation by the Federal Reserve, which has acted as a tonic ever since it was instituted in the first quarter of 2009, makes the odds of further increases in stock prices fairly high. Our main caveat, not just in January but beyond as well, would be to watch commodities. They've rallied strongly in the second half of last year in anticipation of faster economic growth. But at a certain point, additional gains in commodities will become a negative, hampering further growth. Until then, however, the gains are likely to be greatest in the stock market in resource stocks. We also want to point out that among commodities, crude oil put in a relatively poor performance last year, gaining just 15%. Given strengthened demand and OPEC pumping flat out right now, oil could be a top performer in 2011. That's all for now. Thanks for stopping by, and we look forward to giving you more messages.